Hey, what's going on, everyone? Welcome back to the channel all about real estate. My name is Lewis, and in this video, we're going to talk about the conforming loan limits increasing for 2022. They have increased across the board, roughly about 18%, and we're going to get into all of the details here today. And if you're new to the channel and you like all things finance, real estate, or investing, please consider hitting that like button and that subscribe button below. Let's go. Okay, so we're going to go ahead and jump right into it. Up on the screen, I have the article from the Federal Housing and Finance Agency. That's FHFA. Try saying that 5 times fast. Anyway, we're going to go ahead and just take a look at where these loan limits have increased to. I'm not going to spend too much time on it, but they went ahead and announced that they were taking the baseline, which was $548,250 in 2021. They've raised it by $98,950, which is about an 18% increase. And roughly, we've seen price appreciation in homes across the board on a national level, roughly, I think, 18-19% for the last 12 months. The new baseline conforming loan limit is going to be $647,200. And that's going to really expand the purchasing power for buyers that were sort of in that, in those higher cost areas and regions where, they had to go above that $548,000 baseline to purchase. And let's say they weren't in a high cost county, or they had to go to a jumbo loan product. And, at that point, all of the guidelines and stuff totally changes. Like, you may require a larger down payment. The debt to income ratios may be reduced. Things like that make it a little bit more challenging to qualify. So this increase is going to expand the purchasing power for many buyers out there. Might even open up some opportunities for refinancing for people who maybe had jumbo loans previously and they didn't fall within that conforming loan limit. So moving on to just touch briefly on the high cost areas, because there are areas across the United States that are high cost. An example of that would be like San Francisco County. I think the median home price in San Francisco is, I think it's somewhere over $1 million. Anyway, they don't necessarily fall within that conforming loan limit, so they do a lot of jumbo mortgage products out there. But for high cost areas like that, they allow to go to about 150% of that new conforming loan limit with a cap of $970,800. And now this is not necessarily the same across the board. Each and every single county is different. But the Housing and Economic Recovery Act has established like high cost area limits, and they open that information up to mortgage professionals and folks that are out there looking as well. The way to access that spreadsheet and be able to see where your county falls, you can actually, on this link, I'll go ahead and link to this article below, but under other resources, you can click here for a list of 2022 conforming loan limits, and it'll give you access to an Excel spreadsheet, and it'll open it up and it shows the different counties across the country. And so I use San Francisco as an example. Let's just search for that real quick. And click find. There you go. So you can see here that in San Francisco County, it's a high cost area. $970,800 is the high balance conforming loan limit. San Diego County, another high cost county, it's not $970,000, but it is $879,750. So you can basically scroll through this. You can hit Control F, and then you can search for the county you're in and see if it's any different than that baseline conforming limit of $647,200. So now that you know where the new conforming loan limits are, I just want to go ahead and share some pros and cons with you. So for buyers that were previously looking in maybe that $600,000 range, and maybe they had a limited amount of funds available for a down payment, the increase in the conforming loan limit is absolutely an advantage, because they are now able to qualify based on those conforming guidelines. Meaning, let's say they want to purchase a home for $625,000. It's their first home. They have excellent credit. They can actually look to do 3 to 5% down on that product and still get access to the best rates and the best pricing that's available. Like in prior years, where let's say you went outside of that conforming loan limit, the high balance conforming loan limit wasn't available, you would have to go to what they call a jumbo mortgage. Once you go to a jumbo mortgage, everything changes. As an example of that, they may require a larger down payment, maybe 5 or 10% at minimum. They may have higher credit qualifying guidelines, as well as the debt to income ratio may need to be lower in order to get approved. So for many people, this is actually going to increase their purchasing power and make it so that some of these properties are going to be a little bit easier for them to get access to. Another benefit may be on the refi side. If somebody had previously taken out, let's say, a jumbo loan and the rate was somewhere in the mid to upper 3% range, well, right now rates are kind of still hovering in the upper 2s to low 3s, depending on how you qualify. And if your loan can now fit under that conforming loan limit, it may open up an opportunity for them to save some money. Now, on the downside, it may have the opposite effect for some people, because when you expand a buyer's purchasing power, it may create more competition in the market, further driving prices up, which means that for some buyers, it may make it more challenging and less affordable to purchase real estate, which can obviously be really difficult in this market. All right, so that's going to wrap it up for today's video. I really hope you found the information useful. Please leave your comments below. And if you haven't done so already, please consider smashing the like button, tapping the subscribe button to see more weekly videos on finance, real estate, and investing. Again, my name is Lewis. Take care.